This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. I'm not going to lie, I'm pretty disappointed in the price action I'm observing at the moment. So unless we can essentially come rocketing out of this current setup and start to print some higher highs and higher lows, then this daily cycle is going to fail. And if this daily cycle fails, it means we have got to waste nearly 2 months of time until we can find that early March weekly cycle low. So it doesn't necessarily mean we have to be crashing, but it does mean we've got to waste the time. Whether that is sideways or whether that is down, nobody knows, right? We'll have to observe that and deal with it as it comes. But if we, like I said, don't come swinging out of this cycle low, if we can't get a big push up and set some new higher highs and higher lows, then we are going to have to put on quite a boring setup as we have to grind our way into that early March timeframe to find that weekly cycle low. Now, the positive news is, once we get there, it should, in theory, present a nice opportunity to get behind a whole heap of tradable swings. But I was really hoping what we would get is a squeeze to new highs first and then some kind of quick flash crash into a weekly cycle low. But it seems to me the market is speaking, right? And it doesn't matter what I think or you think or anyone thinks. When the market speaks, it's our job to listen. So I'm going to show you a few things. Some of them are uber bullish, right? But again, in the more short to medium term, I think we are setting up for having to waste a good amount of time. So let's get into today's episode. I wanted to say thank you to the people that have been sending me things to the PO box. I really, really appreciate it. Some people have been sending my dog some toys as well. So thank you very much to all of you that are very kind and treated me to some Christmas presents. You're going to see the theme today is Camel's super bullish longer term. But in the short term, we're at a now or never stage. If this is in play and we've got a triple bottom and this comes next, then happy days. Okay, weekly cycle low flush can come later. That has been my base case for a while. If you've been following me for any length of time at all, you know that's been the base case, and we just so happen to have done all of this and are now right about here. So there's still a chance. Until we fail the cycle, we could indeed see this weekly cycle low flush, okay? But if we're about to fail this daily cycle, like I said, then we might be in trouble here because that might imply that we've got to build some kind of big base up until early March. So let's hope we can get a triple bottom. Here's what it looks like for Bitcoin. Hopefully we're about to start to get that squeeze to the upside. But, you know, print a new lower low here, especially on a daily closing basis. And we have got a failed cycle, which tells us we have to waste a whole heap of time into that March timeframe. Longer term, though, Raoul Paul is showing me something that I find very interesting and just a wee bit exciting, to be completely honest with you. This chart in white shows global M2, the money supply between 2016 and 2018, okay, when Bitcoin had that huge parabolic blow-off top run, reaching about 20k for the first time ever. And in this kind of blue color that we've got, this is global M2 today. So according to Raoul, we are going to see M2 tick up here. So does this imply, if this is going to play out, that we're going to see some Trump printing? Does this imply that we're going to have to see an increase in monetary supply? And perhaps what we're going to have to see is somebody step in and deal with this Dixie, which is currently trading at 110. So is someone going to have to step in here and start to print some dollars, increase M2 to try to devalue the Dixie? And will that therefore give us the backdrop to have a very similar Bitcoin run such as we saw in 2016 to 2018? And speaking of 2016 to 2018, here is the current Bitcoin price, the current Bitcoin cycle in bread overlaid against that 2016 to 2017 parabolic bull run. So far, it's actually on pace, right? And again, if it can find a low very soon and then start to push higher, we may have to put this on the table. Adam Back points out, if this actually is to repeat and we are to make it up here, that would be $1.6 million per Bitcoin. And I can tell you for sure, nobody thinks that's on the table right now. However, data is data, okay? It doesn't matter what anyone's opinion is. It doesn't matter what I think or you think. It doesn't matter if I believe we can go to 1.6 mil or you don't believe. None of that matters, right? What matters is, so far, we're on pace for it. And at the same time, it's against a backdrop of a Dixie that needs debasing and an M2 fractal that may well end up repeating for that same era that we get this fractal overlay from. So maybe, just maybe, absolutely no one is bullish enough, including me. I haven't even entertained that we could get above about 300k. I thought 300k would be absurd. And to be honest, it does seem kind of insane that we would just be looking down the barrel of like a 16x from the current prices. That just seems out of order. But one thing we can say for sure is in trading, it works until it doesn't. And right now, this seems to be very much in play. So start to break down from here, start to trade sideways, start to deviate away from it, and we can say, well, yeah, told you so, 1.6 million was total delusion. But if this thing is about to find a low and fire off, if it's going to continue to trace this, then from my perspective at least, there's really no need to doubt it. There's really no rhyme or reason to doubt this is what's in play. So as you can see, I'm super bullish long term until the market shows me something else. And you can also see retail demand at key levels. The 30-day change percent in retail demand has dropped to Q2 21 levels. And the last time this happened, it sparked a major surge. Down here at the hard right edge, similar look to back here, and we saw a big push for Bitcoin. So are we oversold on chain? Seems like we might be. And just before we get into the charts and I show you a couple of scenarios pertaining to the weekly cycles, I wanted to give Jimmy a shout out here because he shared this with me via DM and I was very impressed with this. A very nice and simple local and major top indicator is the money flow on the weekly time frame. You can see here, this is a weekly chart. Down the bottom is money flow. And when we combine a trendline breakdown in price with a trendline breakdown in the money flow index, all the way back in 2013, this would have gotten you out at the top. What about back in 2017, the next cycle? Well, the same technique would have worked again. Combine a trendline breakdown with a breakdown on the money flow, and you would have gotten out as close to the top as possible in trading. In 2021, a trendline breakdown combined with a money flow breakdown at the bottom also gave you a very nice exit signal for the first peak, and it even would have helped get you out at the second peak. Trendline breakdown, very simple strategy, seems to be pretty accurate so far. So let's take a look at 2024, 2025. Well, after we had that run to the all-time high pre-halving, topped around 73, 74k, okay, we then get a breakdown on money flow, and once more, it would have got you out pretty close to the ultimate top. And notice now today, at the hard right edge, Bitcoin's price squeezing higher, money flow index working its way up a trend line. So if we can get some kind of trend line breakdown, coincide with a money flow index breakdown, based on historical data, it suggests we ought to be paying attention to that. So I thought I would share that with you. Thanks again to Jimmy for sharing that with me. And then the question, of course, becomes, what are we going to do about these markets, right? Because the Dixie keeps ripping higher, and whilst it sounds cool to look at Raoul Paul and his big fractal, right? Whilst that sounds cool, whilst it sounds amazing to say 1.6 million per Bitcoin, okay, the reality is there's no sign of this yet, right? There is no sign of this whatsoever. You've got a very stubborn Fed that seems to not want to be printing or even ending QT at this moment in time, right? So this to me just seems a bit pie in the sky until something changes. But this may well, given the strength of the Dixie, be forcing some people to have some conversations behind closed doors to try to figure out a way to curtail this. But for now at least, if it ain't broke, don't fix it. We've been expecting this thing to move higher, and so far it is moving higher. For the stock market, it's funny how a few weeks makes such a big difference, isn't it? Back here, I added a red arrow for the top and said this is where the ultra long-term cycles are due to top. I also drew this yellow squiggle, and all people did is mock and jeer at me and laugh at me and troll me on Twitter, right? And then we get a trendline breakdown before Christmas. The Camel Crew goes flat, particularly in the member section. We unwind a bunch of these positions, lock in the profit from lower down, and everyone says, oh, you've panic sold the low, all of this kind of stuff. And now fast forward to today, and we are going to continue to move down, targeting the second angle. If we do not get a huge strong bounce after we touch this trend line, okay, and swing up here, then we will have to continue to expect this yellow squiggle to play out. And here's the key part, that weekly and daily cycle low is not due until the end of February. So this could get pretty nasty pretty quickly. I'm not saying it has to, and if it follows my yellow squiggle, then you can see it's not going to get super nasty. But in terms of time, there's no real tradable opportunities that I can see at least till late February. Now, there's always a chance that we could see a big spill here, okay, and then get a half cycle low inversion. I'll be on guard for that. But from a stock market perspective, in just a few weeks, we've gone from no way, Camel, you're wrong, to, okay, well, now it looks an awful lot like we're not wrong. So it's pretty interesting to me how quickly risk happens and how quickly all through here, everyone was screaming by the dip, right? Everyone's screaming, oh, we're early in a bull market. Whenever I suggested we might not be that early, again, people got very angry about that. And now we seem to be facing one of these moments in time where the people that know how to manage risk are managing risk, are taking it one day at a time, are being cautious here. And on Twitter, all I see is the same old people telling us there's one leg to the upside left, right? There must be one more high left. Yeah, we're still early. So I don't know about you, but to me, this is not looking very good. This is not looking very good at all. Notice how on Friday, okay, the Dow Jones broke the second angle and is now working on an even lower move to the downside. So this is pretty significant. Again, risk happens fast, and just jumping up and down and screaming by the dip when you have no rhyme or reason to, and the cycle lows aren't due for a while, I don't think it's going to cut it. And so for the stock market, we have got all the way until late February, perhaps even early March, before we can start to entertain some weekly cycle lows. And when we look at Bitcoin, Bitcoin has had plenty of opportunity. If my count is correct, and I believe it was, day 56, we had the back test, and now as you can see, it looks like this thing is going to fail, truly fail. Daily close below all of the lowest lows. I know there was some contention at the time, and some people were saying, no, Camel, this is day 66. Well, the end result is going to be the same. We're about to see a failed cycle by the look of it. Of course, until such time as we are stopped out, then it's always possible that we are about to come swinging out of here. But given the backdrop of the stock market, given that panic is probably going to start to take hold pretty soon, it doesn't seem likely to me. What seems more likely to me is that we've got some daily and weekly cycle lows to find. For Bitcoin, that's not until early March, even later than the stock market. So there's kind of good news, bad news here. The bad news is we're about 2 months away from finding tradable cycle lows. That's the bad news. There's a good couple of months of either chop, like this, and then go, or perhaps even a much nastier correction all the way back down to this, 72, 73k range, whatever. So that's the bad news. But the good news is, once we get there, all of the prior weekly cycles have provided us with a very, very nice opportunity to get behind a massive, massive move in Bitcoin. And if I turn all of this stuff off and just grab my pen, I wanted to show you something very interesting here. And I was showing this to the members at the weekend, right? Let's say that we don't have to have some huge puke back down to retest this. Okay, let's say that's not on the table, and instead we're just going to kind of chop around and build a base in here, something like this. Weekly cycle low early March, and then off we go. Well, all this will be is Bitcoin building a base and doing a double, right? And it does this routinely. This here was a low of about 15k. It builds a base, it breaks the base, and then it does a double up to 30k, right? And then again, it builds a big base, it breaks that base, and it doubles from the low point of 26k to 50k. Then again, it builds another base, and from the low of 38k up to the high of 74, again, is roughly a doubling. Then it builds a massive base. And again, from the low of 50k or 49k, it then doubles, well, it over doubles, makes it all the way up to 108k, and now it seems to be putting in another base. But here's the really interesting thing, right? Even if the low ends up being, let's say, the worst case scenario from my perspective, which would be a back test of this 73k level, okay, let's say it goes all the way back down there. A doubling from 75k is 150k easy, right? And if that low happens to be 80k for Bitcoin, then of course a double in is 160k. Or what if we do what my squiggle here suggests? And this is actually Bob Lucas's base case at the moment, that we're just going to chop around like this until early March. If the low can maintain at 90k or 89k, somewhere around that neighborhood, then needless to say, a quick double puts us straight up to 180k. And it will just be this kind of stair-step base build and double, stair-step base build and double. And then when we come all the way back here, it will have all the familiar symptoms of that, right? Base build, double, base build, double, base build, double. And that's how we very quickly get to a number that no one was willing to entertain. So it's by no means a call or a prediction. I'm just pointing at stuff and saying, as always, I want to be open to everything. And I've spent an awful lot of my time being open to earlier tops. I've spent all of my time being open to managing the risk and putting the downside scenarios on the table. But the reality is, right, we've done the work. We've caught most of the move from the lows. Okay, yeah, we paid a couple of stops in here. And it looks like we're going to pay a stop here, but that's okay because we'll lock the gains from the first trade. We know that weekly cycle lows coming into focus. So I've got two options really. I can either try to force things, or I can just acknowledge that the market's going to do what the market's going to do. We've got a weekly cycle low in focus. And out of there, particularly if we can get a violent flush, we should expect, even in the worst case scenario, to see a good strong push out of that weekly cycle low. And then if it's going to die, it will roll over and die from there. And for the stock market, we have caught this entire move, right? We've done the work. At the lows, I said everyone was too bearish. We traded in and out of this thing publicly the whole way up. We caught almost all of it and sidestepped the drawdowns. And now, once again, we're sidestepping the drawdown. And out of that weekly cycle low, we're going to get, in the worst case scenario, a bounce, a left translation, and a failed cycle, okay? In which case, we can catch this counter trend bounce and jump out here. And in the best case scenario, we can somehow avoid a recession. We can somehow say that none of that data matters, or maybe the data improves, right? Maybe none of that stuff is actually bad, and we are indeed early in a bull market. And what we can see is this thing resolve to much, much, much higher numbers. But in terms of the work rate, and I think we've done it, right? We caught the moves. And now it's just a case of sitting on the sides and waiting for those weekly cycle lows to show up. And then out of those weekly cycle lows, we'll have something to do. So I'm your boy Camel. It might get kind of quiet here for a while on this channel. I'm still going to be posting every day, but I don't really see how I can be putting trades on at the moment, given where we are in the weekly cycles. I'll be on guard for inversions and early kind of forced lows just in case they're to show up. But on a balance of probabilities, there's not a great deal of work for me for the next couple of months. Of course, if that changes, I will update you. Of course, if you're a level 3 member and I find some trades, I'll put some trades on. But for now, I kind of expect to just sit back, let the market give me what it's going to give, and then we will formulate a plan and keep an eye on the space in the meantime. Other than that, have a fantastic week. I'm your boy Camel. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies on a bump.